In today's interest rate markets, let's take a look at the two-year note futures as they're experiencing some selling pressure today. Two-year note futures lower for a second session. Today's price action has the futures market trading down to the lowest levels really since the end of November from a closing perspective, and it does appear we're going to put in a new closing low going back to the end of November, so nearly a 3-month closing low today, right around the 101.27 level in the futures market. And when you look at some of the factors, really the themes continue today with the weekly jobless claims coming in lower than anticipated, right around 200,000, indicating the labor markets remain tight, and the Fed is certainly watching that. We had several Fed speakers over the last couple of days and continuing today. And the indication is that they're going to continue to evaluate the data moving forward, and they're really not in the camp that they are looking to move anytime soon as far as interest rates if the economic structure continues to maintain where it currently is. And also they're keeping an eye on inflation, as we did see a shift in that dynamic here the last couple of weeks. Now looking at the yields, we got a two-year yield up about 5.5 basis points today to 471 basis points. So moving back up, as I mentioned, towards the top end of the range here for the last 3 months. And when you look at the yield curve today, the inversion is steepening today, with the short end of the curve selling off, moving those yields higher. Actually, the back end of the curve, the 10-year is pretty much unchanged on the day, and you go back to the 30s, and they're actually seeing a little buying pressure, yields slightly lower. So that inversion is widening today in today's price action as pressure is being put on the front end of the curve due to some of the data points that we received in today's price action.